Hello and welcome back to Lipper's Fund Flows Insight Report. I'm Jeff Turnahoy. For the flows week ended August 7th, 2013, the conventional mutual funds industry saw pretty good flows this week. Let's take a look at our macro groups and see where the activity was. We saw equity funds take in nearly $4 billion, called about 3.9. Similar number for taxable bond funds. Municipal debt funds continued to bleed assets, about $1 billion this week. And money market funds saw inflows of over $13.6 billion. Well, it was a fairly quiet week as far as the news cycle is concerned. Last Friday, we heard some comments from Fed presidents hinting that possible tapering could arrive as soon as September, although that didn't seem to shake markets too much. Overall, performance was fairly flat when we look at the Dow Jones Industrial Average. It lost on total about 40 points for the week, so not a whole lot of activity there. As we mentioned earlier, equity mutual fund investors allocated about $3.9 billion this week. So we saw the biggest activity flow into international multi-cap core funds. They saw about $1.35 billion this week, mostly due to Oakmark International, which took in a record $900 million for this week. They're definitely finding a good audience out there. Surprisingly, we also saw steady flows into long-short equity funds. They were second place with about $577 million in net new money. Again, one product in particular stood out, and that was the mainstay market field fund. It took in over $400 million. Actually, we'll call it $300 million this week for a record amount for them. This fund has been taking over that long-short equity group. It's almost half of the assets in that group now. It's been on a tear for the last few years. Now, the next group we'll take a look at is equity ETF. They also followed their mutual fund brethren. They allocated about $2.3 billion to their accounts this week. This is the sixth consecutive week of inflows. No surprises really at the top. We saw SPY take in about $761 million, so it's usually in either the top three or the bottom three. But the real surprise, I guess, if there was any, was the draw by the iShares Core S&P Mid-Cap Fund, which saw $2.2 billion in inflows. Definitely its best week ever. We also saw at the bottom of the chart, gold, GLD, continued to bleed assets. It saw outflows of about $700 million. Curiously, we had to be on some sort of investing program to understand why, on the one hand, we saw inflows to diversified equity funds and also outflows from diversified equity funds as well. So at the bottom of the page, we saw outflows from QQQ and DIA. So tough to explain exactly what investors saw with that. The next group to take a look at is taxable bond mutual funds. Again, they had about $3.9 billion in inflows. They seem to be getting back on track. We've had a little lumpiness as far as flows go to this group, which is understandable considering what happened in May and June with interest rates. I think investors are starting to get back into the same old program, though, and allocating money back into taxable bonds. Performance was fairly flat this week, but some areas continue to be on fire and others are just an inferno. I'm looking at you, loan participation funds. They took in $1.7 billion this week. Again, another record number for them. They seem to set records fairly often these days as investors are really getting onto this bandwagon. There's plenty of loans out there, and so it's not as if the market is going to dry up anytime soon. It's probably still a very borrower-friendly environment, so investors may have to consider that. Some products in particular stood out this week for their flows, such as the JP Morgan Strategic Income Opportunities Fund. It had inflows of about, call it $423 million this week. It's definitely also attracting a lot of adherence. We'll also examine fixed income ETFs. They saw inflows this week of about, we'll call it $4.3 million. In fact, we'll call that $4.3 billion in outflows. They are positive year to date, though. They've taken in $11 billion year to date, so recently investors have started to feel a little uncertain with their taxable ETF products. Treasury funds in particular saw outflows of about $2.7 billion, leading the outflow charge. One ETF in particular was responsible for much of that. The iShares 3 to 7 year Treasury, the ticker symbol IEI, had outflows of about $2.4 billion this week. Curiously enough, that same ETF took in about $2.3 billion over a few days back in July the 2nd and 3rd, and this week, in fact last Friday, is when it saw these outflows of $2.4 billion. So somebody, I suspect, put all that money in and then about a month later pulled it all out. Don't know who, but we'll keep our eyes on it. We'll also take a look at municipal debt funds. Again, they had about $1 billion in outflows this week. I'm wondering if it's starting to get a little bit of consolidation here. The investors who fled munis earlier, there seem to be some tapering of their own right now, as the outflows have started to decline a bit. This is still the 11th consecutive week of outflows. Outflows from munis are often in chunks, as news seems to take a while to get through to people. I wonder if we're going to see, again, a little bit of moderating in the weeks ahead. Right now, investors are starting to turn positive on some of the short duration muni products. They're still very much more negative about the general and longer duration products out there. So we might see a bit of a tug of war between those two groups. Again, some investors are merely allocating out of those longer duration towards short duration. Others are getting out altogether. So we'll see when things start to turn positive once again. Might not be in the next few weeks, but possibly by the maybe September, October, we'll start to see things change around. The final group to look at is money market funds. Again, they took in about $3.6 billion this week. It was a typical week. It looked like investors were trying to keep a little bit of powder dry for what may come towards the end of summer. Institutional investors allocated about $7.8 billion, and retail investors followed suit. They added about $5.8 billion to their cash accounts. Well, that'll do it this week for our observations on mutual funds and ETF flows. Join us again next week at the same time. Or you check us out online at lipperusfundflows.com for more up-to-date information. Thanks for watching.